Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at Euro Oz as price is rejecting the neckline resistance. So Euro Oz, really nice technical chart to trade recently, especially due to the fact that we had this huge head and shoulders pattern. We talked about getting short on the breakout of this head and shoulders pattern, and what we discussed in the previous Euro Oz video was measuring from the neckline to the head, which brings you around about this 154 level just through here. As you can see, price has now rejected that. We've moved back to the upside, but interestingly enough, we are now retesting this neckline. And are we going to see sellers come in, basically, is what we're going to be looking at in this video. Now, there's a couple of things to consider before we get involved with this market, or even before we want to be a seller. And one of those is strength and weakness. So seasonally, the euro, okay, is pretty bullish. All right, so we don't technically, well, we haven't seen the bullishness come in yet, for one. But two, euro is technically bullish seasonally. Now, interestingly enough, the euro has been getting slightly stronger, but like I said, there's not enough evidence to see that it is strengthening against, you know, the majority of currencies. We're only seeing it against a couple of currencies, but it's starting to kind of bubble away. We can see that obviously it's stronger than the Australian dollar. Pretty much every other currency has been stronger than Aussie. But we also have risk factors with the Australian dollar, which is suggesting that we should be bearish on Aussie due to the fact that there's multiple risks in the market, or we're in a risk-off environment at the moment. And the Australian economy has not been performing very well. There is low GDP. There is low unemployment. Sorry, not low unemployment. Increasing unemployment. So things fundamentally for the Australian dollar are not very good. Fundamentally for the euro, it's okay. Now, we might be seeing euro strengthen just because of the fact that they have low interest rates currently against other markets at the moment. So euro could be used as the currency to sort of trade with at the moment, and you know, that is going to potentially fuel some upside. So really speaking, from a fundamental strength and weakness point of view, the euro is getting stronger and the Australian dollar is getting weak, which means that really, are we going to see downside from this point? Okay, because that what we would need is the euro to get weaker, Aussie to get stronger, and for us to see this downside. Now, the only way I see the Australian dollar getting stronger at the moment is if these if the sort of risk off sentiment changes. If something comes out as like a headline to say that the new COVID variant isn't as harmful, or we're not going to go into imply any restrictions due to this new variant, then we could see risk on back in the market. At the moment, we don't have that. So I do feel like there is still a little bit of risk to this. But the beauty about technical trading is then we can identify when the sort of market is agreeing with our bias. Because at the moment, if we look at it from the right-hand chart, if I apply the sort of resistance level just through here, which is around about 159.38, so around this area there, so this sort of zone, the market has tried to climb above the previous highs and failed. Okay, so it rallied up, retested previous structures, and we've had a false breakout pattern. So that could be the start to say, yeah, we're going to see some downside. Now, the only thing that I particularly like to look at is if we were to see downside, I like to see the market start to form lower highs and lower lows. Okay, so what I would be looking at in particular is the change in trend pattern. At the moment, the market is still very much in a bullish phase, despite being at this sort of resistance level. So what could we see? Well, we could either see price react from this resistance, as the market has been working quite well within this technical here, and if it does, we would see price break out of this sort of channel, break through these current lows here, and move to the downside. Alternatively, we may see sort of a pushback up. We may get sort of a head and shoulders pattern. But if there's a lower high produced, then we could see some further downside to this market. However, just be aware that the risk is the fact that the Australian dollar is getting weaker and euro is getting stronger. So we really, if the market does break above this neckline resistance, we could head all the way back up into 162.30. So just be aware of that if you are going to start looking to get involved with the market. But again, I would let the 4-hour time frame show you if sellers are coming into the market or not. Thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more of our Forex content, and I will catch you very soon.